Okay, live over there. And then let me shoot off a message to my wife about the cat. TikTok. All right. Well, let's take a look at one thing I noticed this morning was that the 30-year rates are all the way up at 4.6% and rising, it seems, this morning. Now, that's going to add pressure on stocks this morning. We've got a kind of a funny week this week. We've got some PMI information coming out at 10 a.m. That's going to affect the market at 10 a.m. But then tomorrow morning, Jay Powell is going to start speaking right at market open, 9:30 a.m. And then at 10, we have Jolt's job openings numbers. So those always move the market, and so does Jay Powell. Then Wednesday, we have a half day on the market, but at 2 p.m., the Fed is releasing their like a report. So that's going to be very important. And then Thursday is 4th of July, and there'll be no markets will not be open. So whatever happened there on Wednesday, wow, but also Wednesday will be some PMI numbers and jobless claims. So we have a whole bunch just going on today, and then tomorrow, and then Wednesday. And then Friday, we finish it off with the unemployment and non-farm payrolls. So even though this week we have a limited Wednesday. Wednesday will be a half day, and Thursday completely, the markets will be completely down. So we only have Monday, Tuesday, and Friday, and then a half Wednesday. We've got enough important reports, economic reports coming out that that the market's going to have to do what it can do in a faster amount of time. It may cause a lot of pandemonium and craziness, actually. So, a lot of people might be expecting this week to be tame and weak volume, but because the strong reports are coming out in a limited week, it's like trying to make adjustments in the normal amount of time will not be enough. So things could actually move quite a lot. So watch out at 10 a.m. That's when we start to get some of the first numbers, and then Tuesday, Wednesday, and Friday are going to continue to move the markets as well. And now with the 30-year rates and rates in general elevated, that's going to add some pressure on the market today. Where do we sit on the market at the moment? Yeah, we sit in somewhat of a panicky Friday day, and we're opening up at the bottom of that. So we probably will pull back. We probably will pull back today. It'll find a bottom, and then it'll go back up and move around and put in some digestion and rotation. Or it does the opposite. It goes up and then it finds a top and then pulls back and then puts in some digestion and consolidation. But one thing's for sure is the market is not free to run right now. So only really whatever movement's going to happen is either going to be a move to safety, so sell off, or consolidation digestion. I think because the economic reports need to be coming out first, we'll see mostly just inconsequential up down movement, down up movement, digestion until those reports come out. And then they might whipsaw each other. All those reports might counter each other. And so this week's just going to be very choppy. I would expect lots of chop and digestion and for almost none of it to be positive. So maybe next week it could be positive. I don't think there'll be a lot of positive progress this week. That's my guess. That's my guesstimate, my estimate, my analysis. I checked for anything interesting pre-market. There really isn't anything. Of course, NNE is up 18% since the close on Friday. So NNE is kind of moving. And we'll watch that and the rest of the markets. Let's see what happens off the open. The market just opened. Let's see what happens off of the open. Well, see what I mean, Randy? But don't fret. So NNE is selling off right at the open, and that's taking profits off of a pre-market move. I mean, makes logical sense that should happen. But we'll find, how the people that want to get out will dry up, and then people who want to get in might want to get in, and so it'll find some kind of a bottom. But this is the whole thing I'm talking about gift. Don't look a gift horse in the mouth. Okay, now the market is moving up off of the open, and I'm seeing about 55, 60% green on growth opportunities off of the open. So that's somewhat of a good sign. And NNE maybe has found some bottom and looks like it's going to catapult up over 27.5 or 28 any moment here. You want to get in, but you don't know where to start. You want to get in what? Like the stock market? Kayla, click the link in my bio, come to my Discord and send me a private message and then we'll talk. But if you were to send me a private message, for example, here on TikTok, we'll talk, but I don't check my private messages on TikTok except for maybe once a week or once a month. Okay. So if you want to talk today, send me a private message on my Discord server. I don't know if you're familiar with that, but it's not that hard. Just click the link in my bio, go to where it says Discord, trading community or something, come over and send me a private message. And even that will take a moment for me to notice because it'll be in message requests. It'll be in this funny area. And, I'm busy. I'm a busy person. So I don't think of everything all at once. I'm not omnipotent as much as I wish I was. So, but I'll get to you as fast as I can if you go that way. If you go the other way, yeah, I'll get to you, but it's going to be a while. And the thing is, I look forward to helping you out. That's exactly why I'm here. Exactly why I do what I do. Let's see here. I got to put in some orders while the market is doing its thing. I'll switch over to this view so you guys can see what's going where. Because I want to try to figure out, Kayla, like from you, like, so we have to have a conversation. I have to figure out, what do you want to do? Like, what are your goals and what's your, you know, current lifestyle and projected lifestyle and situation. And it's a lot. All right, let's see if I can get these closed out. Robinhood doing really good on Robinhood. Off of the open, one of the strongest movers is Sell H, which Joe has been on top of. And what's it at? Sell H 60.9. I think that's beyond where we were hoping for him that it would be. So good on him on that. Yeah, still not really reversed though. Okay, I got to put an order on Robinhood. Selling my Robinhood. Closing it out. GCT looking good. Mara is up 4.2% off of the open also. That looks good. I'm at 81% max profit on Mara. On GCT, I got one contract left. Let's see if I can get a nice exit on that for $7. Okay, that'll be fine. Where's Mara? There we are. Okay. WDC. A lot of our favorite stocks are just doing well off of the open this morning. Okay, the growth stocks are starting to pull back now, and that's probably because of elevated rates. So you can see that on the Qs moving back strongly, while the industrials, which are inflationary and would definitely be tied to this move in rates, are moving up. So growth is moving down, inflationaries, industrials are moving up, and the S&P 500 is kind of up and slightly sideways, like kind of like in the middle. And that's because there's a lot of value in the S&P 500, value stocks versus growth stocks, and a lot of those industrials are also in there as well. So it looks like just looking at those three markets, but I could do an even more comprehensive analysis. But just looking at those three markets and the way they're moving, I would say that there's a flight to safety right now, that there's some movement out of growth and it's being pushed into value and safety and defensives, inflationaries, because that's sort of happening. And yet the VIX is really not moving much. So that's very interesting. And VIX is not moving, which is meaning that nobody's really hedging anything in particular. They're just pushing the cash around. They're just moving out of this, moving into that, just reallocating at the moment. So we'll see if that changes. But the VIX is not heavily moving, which tells me that we don't expect much from these reports this week. That's what that would say, is that there's not a real concern that there's going to be much uncertainty out there. What was I just about to do? I was going to look at WDC, right? And I want to get that order in. I'm at 91% max on that. Penny, $1. Exit on that. Adobe at 93% max profit. I just got Mara. Okay, so I just got my fill on Mara. But look at that on Adobe. In on the first day and held through the zigzagging, and then it went took just like 1 to 2 days after about a week and a half for it to just break out to a new price level. And at that point, I'm at 91% max profit. So power of the put credit spreads, guys. Right? That was Adobe. That order's in Mara. Okay, I'll try and get a next closing order on Mara now, because I still have lots of contracts on that. Try for 5 cents. Where did I? Okay, that got filled right away. I better look and see what that last fill was, because if it was better than 5 cents, it was 6 cents. Okay, so I got three contracts left. Let's try a four. Let's keep inching it down. Obviously, Mara's doing quite good, and people want my exits. And that's all I needed. Look at that. So the amazing thing about the put credit spreads is I got in Mara here at 2073. Now Mara's at 21, and that's a month later. So normally with stock, you'd be up, see, a micron, whatever that is. Let's see. You'd be up 2% from 2073 or 2080 to 21. Actually, it's not even that much. I think I misclicked because it couldn't be that much, could it? 1.8% from 2054. See it saying. So it's not really measuring it properly. It's barely up. I got in at like 21. A month later, it's at 21, right? But because I got a put credit spread, my break even kept going lower and lower. So a month later, it's like I now own Mara at 17. See? And so that's like being up 23%. And that more accurately reflects what I'm up. So that's again the beauty of the put credit spread. You would have been sitting on this and been nowhere a month later. Now I'm at 91% max profit, which is about 25% return on my capital in a month. Mara. All right. And I'm just taking profits. These are some of my positions. Carvana, I'm up on that. Other things that are at the top of our list moving up, AMKR, CEG, I'm very curious about because I want to get in CEG. Carvana, yeah, I can take profits on that. Some at an aggressive price. Try 19 cents. Okay. Let that sit. App. Okay, but let's check out CEG. Yeah, it's kind of going nowhere, but this is actually a really great point to get some off the bottom of this range here. Let me see what the runway is to ER. How much time do we got before ER? Am I pushing the wrong button? No wonder. Caps lock instead of shift. 31 days, that's plenty. So now I'm going to go check the options, and this is probably uh, where I always find that it's not a good idea to get in it or something. There must be some reason why I'm not in it. Maybe the option liquidity just isn't there. But I'd be hoping for something like a 191.85. Let's see where the 20 delta is. 190. Okay, and the liquidity is okay. So the 190, 185, yeah, $1.10. That's like 27% ROC. All right, so I'm going to pick up some CEG here. Actually, I just got filled on all that at that price. You guys might be able to get a better price than the $1.10 by selling the 190, 185 August 16. 46 days to expiration. I mean, it's absolutely perfect with our system. But anyway, I'm going to get one more because I accidentally bought one underneath my size, or sold rather, sold to open. I'm going to see if I can get better than 110 because that was too instant of a fill. Try. I did. I got 115. Well, shit. Why do I keep getting such good fills here? I'm going to try for another contract then. At even better. Try 125. Just jump up a lot. Oh, I hit delete instead of fill. All right. Come on, come on, come on, come on, come on. Okay, that didn't fill right away. Oh, it did. I got 125. Geez, I wish I could give back all of my original contracts and get all these fills. $1.25 divided by 375, 33% ROC. for a 20 delta. That's insane. All right, let me draw the break even on the chart here. So I have that. August 16 from here is right off of the charts here. So right over here. And I got the 190 for a dollar 25 essentially. So that's 188.75. Boom, right there, plus a little cost averaging. Man, if it's going to keep giving me these good prices, I don't know. I might have to even get another. I'm going to try for a dollar 50. That'd be ridiculous. It's back at 90 now. $1.50. See if I can get a $1.50. I don't know what's going on, but I'm getting good prices here. I'll figure it out later. Let's make money now. All right, I'm asking for a $1.50, which is ridiculous. That would be 3.5. That'll be 43% return on capital for a 20 delta. What is the delta on the 190? It is, well, it's actually 24. I thought it was a little bit lower than that, like 22, 21, but that's okay. 24 is still doable. And also it's below the double bottom here. So that should be safe. Phillips is PHG. Okay, but I don't think it's a US company. Yeah, see all these skips in price? Fucking ass. This guy pushed the wrong button. See all these skips and gaps in pricing? That's because it's not a US traded company. So that can make it more difficult to trade. Maybe you're not in the US. Anyway, yeah, it does not look amazing in a very slow stock. The stock market probably does better than this. In other words, you're not beating the stock market, investing in the stock market by picking PHG. The individual stock pick of PHG is not outperforming the stock market. All right, the Qs continue to sell off, probably under the slight inflation concerns, the worries about these high rates. And in inflationaries and industrials are moving up, and then SP 500 somewhat sideways. And wow, look at NNE, guys, it's almost at 30. So I'm hoping, Randy, you got a little 5% exit somewhere in there. NNE is really flying. So like we were saying, maybe it's going to get to 46. Maybe not today, but maybe. New highs will be at 37.50. That seems almost likely today. All right, I'm definitely not getting that fill anymore. Oh, wow, it could actually give me a $1.40. I was getting pretty close. I'll keep it out there then. All right, let me move that to bullish. And let's look at some more opportunities. So sell H, yeah, no, don't get that. But what was that one? Oh, CEG. It was CEG. You guys, our masterclass that would normally be on Thursday night, obviously, we're gonna be watching fireworks. It's 4th of July. So, yeah, we'll still have to push that masterclass until Thursday next week. But we're going to cover some incredible ways to use RSI to gauge entries. It looks like the market on S&P 500 is pulling back pretty hard now as well, and the Qs are sort of nose diving. Let's take a look at that on the bigger picture. Yeah, this pullback digestion I was talking about. It's going to find a bottom some point today and then move back up, and it's just going to be digestion. This is basically my first prognosis. This is basically exactly what I said would happen today. So no surprise. And now we're at about only 30% of stock opportunities are green from the open, and that's not good. We only enter long on green days, green moves from the open. So we really can't get too excited about entering anything further here. We got into CEG and that was a good start. Yeah, I still need to get my exit set on app APP. I don't want to miss any take profits on a day like today where it's pulling back and I'm supposed to be taking some profits. So let me get these in. See if I can get an exit for at 2/3 of the bid. And down here, I have two app positions. You can see those two lines there. And they're both past 50% max profit. All right, those will be out there and they will sit there. GoDaddy. This is the one that Cameron wanted to tandem trade with me on. It's just moving along our break-even line right now. Hasn't really made a made the move in the right direction yet, but it's just moving right along our break-even line. So that it's just behaving perfectly. And yet, I suppose because of a drop in some volatility, we are up 20% to max profit already on that. Well, alrighty. It's about 10 minutes until the top of the hour. And oh, by the way, Carl and others who follow my bond trading, I did hedge my 30-year bonds right at the close of market on Friday. Looked like that turned out to be a good decision because rates popped from like 4.5 to 4.6, which is a pretty strong pop. So anyway, I'm protected on my rates. I've sort of vowed not to hedge any of my PCS positions because in some sense, the fact that they pay theta is a hedge in and of themselves. You can think of theta as almost like 5% insurance or something, slapped onto a trade. So, and sort of variance is part of the system. So I'm going to attempt, perhaps for the rest of the year, not to hedge my market positions. But yeah, I will hedge my rates when I need to, my bonds. And also, they're much slower moving, and you can sort of trust their movement more often than not. So rates are going up. And if they do get up to nearly 5% again, or 4.9, something like that, I'm going to pick up some more. So, yeah. All right, you guys, I'll see you back in the group. Thanks for tuning in. And don't forget to click the link in my bio or whatever and come on into our group and say hello. All right. Have a good one, everybody. You too. Bye bye now. Thank you.